Host Pat Walker at Mission Winners. We're doing a video recap of the week and the major index ETFs, which help frame up the action better, and the Max List, a list of stocks that I have had primarily the main components of it together for 20 years. Big names, the horses. And we build from there. Have there been recent additions to the list? Well, sure. Tesla wasn't on the list 20 years ago. You know, just common sense. Square wasn't on the list 20 years ago. Nvidia wasn't on the list 20 years ago, but they are now. But stalwarts like Apple, Amazon, they've been on the list. So let's take it from the top here. Here's the Qs. Lost the 200-day, hovering down here. QLD, similar situation. QLD, Qs, NASDAQ 100 stocks, the big ones. Spiders, I want to show you something. QLD dropped below the 200-day on March 9th. Spiders, or SSO, dropped below the 200-day on 2/27. It was weaker, which is why we really got cautious fast. IWM fell below the 200-day on 2/26, and it hasn't even recovered. Look at that drop. That's why we do this, to find strength and find weakness and act accordingly. TNA, similar situation, the leveraged ETF. I don't do UWM, it's too thin, but I do TNA, triple leverage, but it's very fluid, so it's okay. So here we go. Here's Apple. Apple, MAXLIST stock. Gaps down below, right here, the 50-day. We owned this from right there. Right there. 228, 228 and a half. Walked up, walked up, walked up. Sold some into strength. Starts losing the moving averages. Shares sold here. Last share sold there. Done. Great move. Selling into strength. Not bragging about it. That's not the issue. The issue is this investment management. Investment management. If we hadn't sold, guess what? We're basically at break even. I don't like riding almost a 100-point gain. I don't really like, I'll be honest, you ride the roller coaster up and all over the place and then back where you started. You do that with stocks, it's not a lot of fun. So that's why you have rules. Below the 200-day, is there any real leadership in this here? No. Amazon above the 200-day. Gapped up on Thursday, was a keyless stock, had a good lift, and then, I was telling people, sell into strength, sell some, don't overstay it. It comes all the way back down. Now it's below the 200-day again, but not by much. But it was above the 50-day. I want you to remember that. Amazon was above the 50-day. Apple, way below the 50-day. Amazon touched the 50-day. Alibaba, way below the 50-day, hovering down below the 200-day. We're going to need to see a strong lift off the 200-day to even see any sign of strength in the stock, okay? Baidu, look at this. Chinese stock, below the 200-day. Baidu, Chinese stock, even further below the 200-day. Here's a great lesson for you. Two big Chinese stocks at the 200-day, way below the 200-day. Which one's stronger? Now, neither of them are super strong, but which one's stronger? Baba at the 200-day, Baidu way below. Baba. So if you're interested in one, it would be Baba over Baidu. That's how you do it. Facebook, living below the 200-day fallen. Showed some life there, right there, on volume on Thursday, gave it back. Tough down here below the 200-day. The air's not good down below the 200. Overall, folks, the air isn't as good below the 50-day. The air is much worse below a falling day, 50-day. And the air's not so good below the 200-day. It's kind of stinky. Goldman Sachs, look at that, losing the 200-day. Is this cool? Loses the 200-day right there. Look at the volume pickup. You think that's mom and dad selling? That's serious coin going on there. Falls, shoots back up near the 200-day. But notice this. Volume on this bar, volume on this bar, volume less. And gets close, touches the 8-day. You think anybody doesn't know about the 8-day exponential moving average? And then it just walks on down. Is there anything to do with this? No. Oh, it's got to bounce. Why? Be very pragmatic here. Oh, it's got to bounce. It's oversold. Oversold can get a lot more oversold, so lose that phrase. Forget that overbought, oversold crud, okay? Get in line with what is. Goldman, way down here, all right, below the 200-day. Good bar, quieter bar, drops again on a pickup in volume. Look at how this stock walks down the 8-day. That's something to remember. Walking up or down the 8-day or the 20-day or the 50-day. There you go. Netflix flopping around. Now look at this. Way below the 50-day. Google. I'm going to do this again for you. Ready? Way below the 50-day. At the 50-day. Way below 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 the 50-day. Closer to the 50-day. Huh. So I ask you right now, which of these stocks is demonstrating better strength? Netflix. Now, am I saying buy it? No, but I'm just saying this stock has demonstrated more strength than the other ones, those others. That's all. But we like strength, something to monitor. Nvidia, below the 50-day, flopping around, nothing really good here. But I want to show you a lesson. Bought this right there. I told it was keyless stock the night before, lifting off the 8-day. Rallies up. I tell them to sell into strength because of the market action. Don't overstay your welcome. It's a shorter base setup. Starts to lose here. Lost the 8-day. Rest is sold. Made money. And guess what? If you buy this here and you watch this thing go up about taking out the high of that bar right there, let's suppose you buy it for $254. Runs up to $316. 60 points. Not that you're going to sell at the top, but you sell some into strength. If you don't sell any and you wait, it's an investment. I'll stay with it. It's a good company with a good product. Oh, that's great. We'll all sing on the good ship Lollipop as it sinks. Right here, from having a 60-point profit, and now you have a 50-point loss. That's not good. Don't do that to yourself. Manage it. By the way, in this entire move, ever look at a 5-minute chart? No way. No way. I rarely look at 10-minute charts. I've looked at a 5-minute chart. I don't know if I've looked at them this year. Not day trading anything. Square. Square, if you bought that, that's more than a rounding error. That's downright ugly. But it was good. I want to show you something. There was a little setup right there. Look at the volume pickup on that bar. Isn't that nice? It was a quick one, and then the market ran it up, told people to get out, flops around, and there you go. Tesla, beautiful trend. Look at this trend right here. That was close to 600 points. Did we sell at the very top? No, liars sell at the very top. No. Did you sell some into strength? Yes, you did. By the way, this is a great lesson for all of you. Highs here and highs here. How was the volume on this bar? You tell me. Well, Pat, it was pretty heavy. How was the volume on this bar? Well, Pat, it was a lot lighter than the previous one. Yes, buying pressure was less. Close to a double top formation. On that bar, I was telling people, sell more. Well, sell more. Take it. And then we lost this. And you basically let a 600-point gain go all the way down to where you're up a little over $100. That would be very frustrating. And I'm keeping it clean. Twitter. Yep, all the tweets that everybody's doing, it ain't helping. Below the 200-day. Visa falls below the 200-day. There's nothing there. We can all charge a bunch of stuff like, I guess, toilet paper at the store, right? But there's nothing there. MasterCard, similar situation. That's the max list. It gives you a great idea looking at the ETFs first and then the max list. It helps us frame up strength and or weakness, where to go, where to avoid, or what to avoid. It makes life that much systematized and easier. And that's it. Anyway, I wanted to share that with you, and I hope that helps you. Hope you're all having a good, safe weekend out there. And please be careful and be safe in all respects.